world economy is in crisis right now.
The year nobody saw coming. 2025 wasn't supposed to look like this. Just 12 months ago, the headlines screamed recession risk, inflation crisis, global slowdown. But here we are, the market near record highs, the S&P 500 posting double-digit gains, and analysts once again rewriting their forecasts. The truth: the U.S. economy didn't follow the script. Donald Trump's return to the White House brought a whirlwind of tariff threats, deregulation, and unpredictable policy moves. At first, Wall Street panicked. But then, something unexpected happened. The markets bounced back. Tariffs eased, rate cuts arrived, and investors rediscovered something they'd forgotten during the chaos: momentum. After 2 years of relentless uncertainty, the mood in the markets shifted. Fear was replaced by a different kind of energy: cautious optimism. And that's where our story begins. Because in 2025, making money in the markets isn't about chasing hype. It's about spotting strength, real strength, in a world that's still learning how to grow again. So in this video, we'll explore the best stocks to buy this year, based on the latest October 2025 reports from top analysts and financial institutions. We'll break them down across sectors, from AI and energy to aerospace and consumer growth, and uncover the stories that make these companies more than just ticker symbols. This is the definitive guide to the best stocks to buy now, and the ones that could define the decade ahead. The market's tightrope: hope versus hype. If you've been following the market this year, you've probably heard this phrase: the market is walking a tightrope. Morningstar's chief strategist Dave Sekera said it best: we're balancing on a line between the AI build-out boom and the slowing real economy. The numbers back him up. After back-to-back 20% annual gains in 2023 and 2024, the S&P 500 is up another 11% in 2025. But valuations are stretched. The index's forward price-to-earnings ratio sits above 22, far higher than its 10-year average of 18.6. That means the market is expensive, but not invincible. Every move counts. Every company that beats expectations can make or break a portfolio. This isn't a time for random bets. It's a time for precision, for picking stocks that have not only survived the chaos but learned how to thrive in it. So where do you start? Let's begin with the beating heart of 2025's growth story: the technology sector. The machines that rule the market: tech and AI. No sector embodies this decade like technology, and within that, no company defines it like NVIDIA. If the 2010s were about smartphones, the 2020s are about intelligence. Artificial intelligence, machine learning, neural networks. And NVIDIA isn't just riding that wave, it built the surfboard. This year, NVIDIA stock is up over 41%, even after years of explosive growth. Its secret: the company doesn't just make computer chips, it powers the entire AI revolution. NVIDIA's Blackwell chips are the crown jewel of the computing world. They're used everywhere, from self-driving cars to cloud supercomputers. Despite rising competition from companies like Broadcom and AMD, analysts say NVIDIA's technology remains miles ahead. Bank of America calls it a buy, setting a price target of $235. CFRA Research agrees, adding that NVIDIA's dominance in AI chips is not a zero-sum game. Even as governments tighten export rules to China, NVIDIA's reach continues to expand in data centers, gaming, and enterprise AI. More importantly, it's not just retail traders piling in. Institutional investors, including Fidelity Contrafund and Franklin Growth Fund, now hold over 40% of NVIDIA's shares. In short, Wall Street isn't just betting on NVIDIA. They're building on it. But NVIDIA isn't the only tech stock making waves this year. Enter NetApp, one of 2025's most surprising comeback stories. At first glance, it's not flashy. NetApp makes storage hardware and data management systems. But as companies race to adopt AI, they're realizing something critical: all that intelligence still needs somewhere to live. That's where NetApp shines. The company reported record earnings this year, even as the global economy wobbled. Its pivot toward cloud services and enterprise AI has made it an essential part of the tech ecosystem. Analyst Jim Kelleher at Argus Research calls NetApp's performance impressive amid uncertainty, giving it a $130 price target. So while NVIDIA builds the brains of the future, NetApp protects its memory. Together, They're the 1-2 punch driving America's new digital dominance. But technology isn't the only game in town. Some of 2025's biggest winners are grounded in steel, concrete, and pure physical demand. The backbone of progress, energy and infrastructure. Look beyond the buzzwords of AI, and you'll find a quieter revolution happening. One built on cables, steel towers, and massive construction projects. That's where Quanta Services comes in. Up more than 33% this year, Quanta is the company wiring America's next-generation power grid. From renewable energy transmission to data center construction, Quanta is the infrastructure engine behind the digital world. In June, the stock triggered what traders call a golden cross, when its 50-day moving average crosses above its 200-day line, a strong bullish signal. Jefferies analysts upgraded the stock to buy, raising the price target from $398 to $469, citing Quanta's expansion into renewables and data centers. CEO Duke Austin says it best. Demand for our services remains resilient, fueled by our customers' multi-year programs to build the power grid and infrastructure necessary for load growth from technology adoption. Simply put, every new EV charger, every AI data hub, every factory reshored to US soil needs more power. And Quanta's the one building the wires. But power needs control, and that's where Exelon Corporation enters the story. Exelon has transformed itself into a pure-play utility, focusing entirely on electricity distribution in cities like Chicago, Philadelphia, and Baltimore. With 5 to 7% projected annual earnings growth and a 5% dividend yield, Exelon is the definition of consistency in a market obsessed with volatility. Analyst Marie Ferguson says the company's shift away from competitive trading to regulated utilities makes it a stable compounder in uncertain times. Together, Quanta and Exelon are fueling America's physical growth, proof that even in the AI age, electrons and steel still matter. But while they power the world, another set of companies is quietly shaping how we live in it. The everyday economy, resilience and reinvention. Every great bull market has its consumer champions, companies that understand human habits better than humans themselves. And in 2025, one of those names is DoorDash. Once dismissed as a pandemic bubble stock, DoorDash has reinvented itself into a profit machine. This year, it delivered what few tech companies could: 4 straight profitable quarters. Earnings soared by a staggering 757% year-over-year. The company's subscription program, DashPass, has become its secret weapon. Members pay $9.99 a month and order twice as frequently as non-subscribers, a model that's turning convenience into recurring revenue. Citi analyst Ronald Josie gave it a $315 target, praising its push into grocery and convenience delivery. DoorDash isn't just bringing dinner anymore, it's bringing the future of on-demand living. But while consumers indulge in convenience, another company is thriving on loyalty, from our pets. Freshpet has been one of the market's most misunderstood stories. After skyrocketing in 2024, the stock plunged nearly 60% earlier this year as growth slowed. But here's the twist: analysts now believe it's one of the most undervalued growth plays on the market. Morningstar calls it a 5-star stock, trading at a 50% discount to fair value. Because even when people cut back on luxuries, they rarely cut back on their pets. Freshpet is expanding production capacity and distribution partnerships, with projected 40% earnings growth over the next 5 years. In a market obsessed with AI chips, this is the kind of grounded, relatable business that can quietly outperform expectations. DoorDash and Freshpet prove a simple truth: people may change their habits, but they never stop wanting comfort. The return of the financial giants. While consumers spent and companies built, something else happened in 2025: the return of confidence in American banks. Leading that charge is J.P. Morgan Chase. After acquiring the failing First Republic Bank in 2023, J.P. Morgan used the opportunity to expand its high-net-worth banking arm. Analyst Stephen Bigger now calls J.P. Morgan the top large bank pick, with a $318 price target. Its balance sheet is enormous, nearly $4 trillion in assets, and its exposure to the U.S. recovery makes it one of the most stable names in finance. Close behind is Bank of New York Mellon, the quiet giant of global cash management. It doesn't make headlines often, but it handles the money that moves the markets, managing transactions and liquidity for the world's biggest funds. Analysts praise its new digital-first commercial model and rate it a buy at $105. Then there's LPL Financial, the dark horse of this sector. LPL isn't a bank, it's a platform for independent financial advisors. Think of it as the infrastructure that powers America's investment advisors. Morningstar recently upgraded LPL's rating to wide mode, citing high switching costs and massive scale advantages. As markets grow, so do LPL's fees. It's one of the few financial stocks that directly benefits from rising investor confidence. Together, these three names are redefining finance for the modern era: big, efficient, and digitally driven. But the heart of the U.S. economy still lies in one word: industry. The industrial comeback, strength in steel and sky. When the world feels unstable, investors often turn to what's tangible. And few sectors feel as tangible or as vital as industrials and defense. Leading the way is Howmet Aerospace. This stock is up 75% in 2025, driven by a mix of commercial aviation recovery and rising global defense budgets. Its EPS has grown 42% across the last 3 quarters, and institutions, including Fidelity and MFS Growth Fund, now hold over 60% of shares. CEO John Plant recently said, "The commercial aerospace market should continue to grow, driven by healthy passenger traffic, extraordinarily high order backlogs, and demand for new, fuel-efficient aircraft." Simply put, every time you book a flight or see a fighter jet, Howmet probably built part of it. Next up, Caterpillar, the industrial titan that never quits. Despite slowing global growth and tariffs, Caterpillar reported record earnings and expanding margins in 2025. Its management has weathered decades of economic cycles and continues to deliver, literally and figuratively, the machines that build the world. Argus Research rates Caterpillar a buy with a $460 target, calling it one of the best-positioned stocks for periods of inflation and global uncertainty. And for investors who prefer subtlety over spectacle, there's IDEX Corporation. IDEX isn't a household name, but it owns a collection of niche businesses, companies that dominate tiny markets with huge margins. Its CEO describes it as a cash compounder, known for disciplined acquisitions and high returns on invested capital. After a tariff-related earnings dip, the stock now trades at a rare discount, about 20% below fair value. Analysts project 11% annual earnings growth for the next 5 years as margins rebound. Together, Howmet, Caterpillar, and IDEX form the industrial trinity of 2025: high demand, solid fundamentals, and global reach. But if you zoom out even further, you'll see something else happening: the return of global opportunity. The global stage. International stocks to watch. American markets may dominate headlines, but in 2025, some of the most exciting opportunities lie overseas, especially in Europe. One standout is SAP SE, Germany's cloud and software giant. SAP has spent years reinventing itself from a legacy software provider into a true AI-powered cloud platform. Morningstar rates it a 4-star stock, calling it one of Europe's most undervalued tech plays. Its deep ties to enterprise clients give it stability, while its AI and data management platforms provide growth potential that rivals U.S. counterparts. Next, we look to the United Kingdom, or, more accurately, to the world of fine spirits. Diageo, ticker DGEAF, is the global leader in premium beverages. From Guinness to Johnny Walker to Smirnoff, its brands dominate the top shelf in over 180 countries. The company hit turbulence in 2024 as inflation hurt consumer spending, but analysts now call it a 5-star recovery stock. Morningstar's European team believes Diageo's renewed marketing investments will reignite growth and regain market share by 2026. When luxury spending rebounds, and it will, Diageo stands ready to pour the profits. And finally, there's GE Healthcare Technologies, one of the most intriguing healthcare plays of 2025. Spun off from General Electric, GEHC focuses on imaging and diagnostic equipment. Tariffs briefly dented its guidance earlier this year, but its backlog remains enormous, enough to keep factories running at full tilt for years. Morningstar rates it 4 stars, calling it a strong value stock in a misunderstood corner of healthcare. In a world obsessed with AI software, these global companies remind investors that innovation doesn't stop at America's borders. Lessons from 2025. What this market really means. So what does it all add up to? The story of 2025 isn't just about AI, or rate cuts, or politics. It's about resilience. About how markets evolve, adapt, and sometimes surprise even the experts. Artificial intelligence redefined what's possible, but energy infrastructure made it practical. Defense contractors thrived under geopolitical tension, while consumer brands learned to adapt to new realities. And amid it all, one pattern stood out: balance beats hype. The investors who did best this year weren't the loudest, they were the most patient. They looked for companies that combined innovation with fundamentals, growth with discipline, and vision with execution. NVIDIA and NetApp taught us that AI isn't just a trend, it's a structural shift. Quanta and Exelon showed that every digital revolution needs a power source. DoorDash and Freshpet reminded us that convenience and loyalty still drive spending. And the industrial and financial giants, Caterpillar, Howmet, JP Morgan, proved that legacy can still mean leadership. Even the global picks, SAP, Diageo, GE Healthcare, reveal how interconnected modern markets have become. If 2024 was the year of fear, 2025 is the year of clarity. A year where data mattered, but discipline mattered more. And maybe, just maybe, it's the start of a new golden age of investing, one built not on speculation, but on smart conviction. Watching the next giants rise. As we close, remember this: every bull market creates legends. The question isn't whether opportunities exist, they always do. The question is whether you'll see them before everyone else does. The companies we've explored today, from NVIDIA to Caterpillar, aren't just stocks. They're snapshots of the future economy. Each one represents a different kind of power,